Hello everybody, this is Project Trade. Welcome to the Price Structure Show, and we're looking at a quick and easy one here today. It's the inside candle pattern, aka the ICP for all my homies and juggalos. There are a lot of basic candlestick patterns out there, and this is one of the most basic of the basics. It's a pattern which contains just two adjacent candles, already hinting at the fact that it's a pretty simplistic pattern. All that it is, the high to low price range of the latter of the two candles is entirely within the high to low price range of the former candle, making it that the second candle is inside of it. It is being engulfed by the candle before it. We know a picture is worth exactly 1,000 words though, so here's a couple of examples. This one on the left, our second candle, the bullish green one, the highest low of those wicks clearly inside the highest low of the previous candle. Another example with the candles going the other way this time, no different though, be it red before green or green before red. It matters not, because all we're looking at is again the high to low price range of the second candle is inside that of the first candle. If you did feel the urge to divide them into subsets of a bullish inside candle and a bearish inside candle, you could do so as such, via trading Magellan with your terminology. So that's all there is to the pattern, but how can we utilize the inside candle pattern to help us with our entry signals? We could start with the breakout of price, which pushes beyond the high or low of the inside candle. In this buy entry example, we look left to right trying to find an inside candle pattern, and we find our inside candle here where that yellow arrow is pointing to, price high to low inside the previous candle's high to low. So our white dotted line just above the high of the inside candle, that would be a stop order for a buy trade entry, which we do get on the next candle as price surges through our trigger level. It's a buy entry there, and price does pull back a touch after the entry, so if your stop loss was tight, you might get caught out on this one. But for us, we do ride the wave all the way up and off into the sunset, probably getting out right at the top beyond even where we can see, making certain of profits. What about for a sell trade? Again, we're looking left to right for our first inside candlestick pattern, which is very conveniently right here for us. Looking like it's going to be a nice setup. Let's just check it. That white dotted line is our stop entry trade just below the low of the inside candle. Once again, we get our entry on the next candle as price knocks through our level, putting us into a sell trade. Looking really nice for us on this pre-selected chart. We do storm off with all the profits, winning trades galore, unbreakable. Another trick, if you wanted to try and add an extra layer of confidence to your trade, you could do that by using multiple inside candles as your entry confirmation. Each following candle inside the next and inside the next, on and on like some comically never-ending Matryoshka doll. It can be seen that the more consecutive inside candles there are, the greater the price is being squeezed on, which could lead to a bigger breakout of price once the move does finally come. Getting multiple inside candles, that type of pattern can occur when the broader price action appears wedge-shaped, a pattern which is well known for trading breakouts with. Onward we march to the money management side of things for the inside candle pattern. First off, it could be that the ICP takes you out of a trade instead of putting you into it. That decreasing volatility or the indecision of the market, whatever it is, that could be enough for you to say, hey, I have had my fun, I have made my hundreds of millions, I am going to step aside from the trade at the close of this inside candle. You could also use the high or low in price of either of the two candles in the pattern as your stop loss. So if you're in a buy trade, you could set the stop loss at the low in price of one of those candles or just beneath the low. And in reverse for a sell trade, that of course means the stop loss could go at thereabouts the high in price for either of those candles, dependent on your preference of the two. Here's our example sell trade from before, this time with a stop loss at the high of the inside candle. In this trade, there was fortunately no chance of that stop loss ever getting triggered. We still got all of the profits. Would have been a bit closer on our buy entry from before though. See that candle, the low of price for it comes very close to the stop loss. Looks as though it could just about be touching it, but I am inclined to believe that we would be a little bit lucky and that price would avoid the stop loss, and instead we would still in fact get all of those profits, every single pip. Away from the stop loss and take profit levels, you could also use one of the candles in the pattern to measure out your risk. For example, the high to low price range of the inside candle, that could be a risk value to your capital of say 1%. Helpful for keeping a more consistent account of how much of your money that you're risking. It would give you a measurement tool that you could would forever refer to when we're in the markets. Because it is a basic 2 candlestick pattern, you are going to see it a lot, especially if you're looking for nothing else. And if an inside candlestick is your one and only signal for entry and exiting with no regards to any other indicators or market conditions, naturally it is unlikely to do well. And I am being generous to not use a definitive will not do well, but it is very, very, very unlikely to do well. Try taking every entry signal every time, see what happens. You would need an incredibly resilient money management system with some consistent good luck to get you anywhere you want to be. What I'm suggesting here is the absolute furthest thing from novel, and it is that you try and make sure to combine this inside candle pattern, if you are using it, with at least one other indicator. That is what you could then refer to as the bare minimum. In conclusion, the inside candlestick pattern, it is a primitive pattern. Once you've seen one, you've seen a million. The basic concept of the ICP hints at a market of indecision or decreasing volatility in price. But in many market conditions, inside candles will appear so regularly that it often seems to be arbitrary as opposed to a clear sign of the trend of the price action. It is certainly not a definitive signal of the next price moves to come. So even though the pattern can be used as an entry signal, can be used as an exit signal, can be used as a risk measure for your trade, it does not mean that it is going to make you any money. And if it is going to make you money, it needs to be a cog as part of a broader strategy. But I do not know who you are. Maybe it is the final cog of the puzzle to get the old sawmill turning again for you. That's not beyond the realms of believability. That is it for the ICP though, but if you do want more, there is some more information in the video description if you are inclined to take a look. And in case it wasn't clear in the charts we've shown you, they are explicitly selected to show you how the pattern could work really well, or maybe not work so well. The chance of you just happening to step on the charts and find anything anywhere near as nice of what we've shown you in our examples, I'll try for yourself, but we do try to find some near perfect examples where we can. Good news though, if you do want to see the inside candle pattern traded in live forward testing, we have certainly done that, and we'll link those videos in the description. Thank you for watching or listening. This is Project Trade. I am Isaac Newton's Apple, and there will be more.